For the last decade, the pundits have been saying, buy in the Sun Belt, and that's where you're going to make your money. Markets like Austin, Phoenix, Tampa. But that's not the case anymore. Markets like Austin might be down 25% from the peak. And other markets, like Indianapolis, are up. So what do you guys think? Sun Belt versus the Rust Belt?
I don't give a shit. Look, there's opportunity in every market across the United States. I do not look, there are markets that are going to outperform other markets. There's, certain periods of time where different areas are going to do better. But the reality is, like, a lot of people look at this stuff and they kind of follow after the fact. They're going after all the big money has gone to these markets or away from these markets. There's opportunity in every market, in everybody's backyard. Every market is local to itself. So yes, while this may be true, I don't think, especially new investors, don't get too caught up in this shit.
Yeah, I think it's the question for me is, why did people buy there? Why did people rush there? For a long time, if you search, what are the hottest markets? It was like exactly those spots. It's been Sun Belt for years, for the last 3 or 4 years at least, if not longer. It's been go invest in the Sun Belt. That's the highest growth. I think anytime you see investors flood to a certain area, most investors are buying for the wrong reasons. They're buying for speculation versus cash flow and fundamentals. And because of that, what goes up will come down. If investors were buying for fundamentals, true fundamentals, you wouldn't see prices come back down in a significant way, in my opinion. So I'm not for or against investing in these areas. I think that you can invest anywhere as long as you're investing for fundamentals. We have a property in Ormond Beach, Florida. The area is softened a bit. You can see that because there was a lot of speculation down there, but we bought on fundamentals. We still have upside on the asset. It's actually kind of a unique asset. It's dispersed lots. So it's not all in one property, but several mobile homes, on lots. So it's like 60 homes, but we're still seeing growth in rents, even with the area softening. So when you see, here's why I'm careful about investing in places that make the news, because a lot of speculators come in and what goes up must come down. You saw it, in Henderson, Nevada, for example. It was like the hottest market ever. And then all of a sudden it's like the worst market ever. And I think we're seeing the same thing in other markets. If you like what you're hearing on this podcast and want to come and hang out with us, as well as other members who are scaling in cash flow real estate, you've got to check out our elite mastermind. Inside, we've got investors who own hundreds of millions of dollars in real estate and are doing amazing things. We'd love for you to come join us. Click the link below.
Well, we saw pro formas of people underwriting properties in Austin, and, there was significant rent growth, but they just expected that rent growth to go on at potential, double-digit growth rates every single year. And if you're underwriting, people think speculation is just waiting for the value of your property to go up and hoping, but that's also hoping that rents are going to continue to grow up. And we've seen that. We've seen that so people rush in, people get frothy. There's a lot of overbuilding, and there's a glut of supply in the market, which then dampens the rental rates. I love the Midwest personally. There's also weather too, by the way. People we're not talking enough about that. I think people are tired of weather events in the Southeast, hurricanes, wind events, et cetera. And people are looking at sort of steady Eddie markets like the Midwest that have always been traditionally good cash flow markets. That's the cash flow as a proportion to what you're buying the property for. So yeah, man, I think it really comes down to speculation. And if you're underwriting, if you're too rosy on your rent increases, you're too rosy on your expenses, you're too rosy on your population demographics, and you're too rosy on the supply and demand fundamentals, I think you're going to get into trouble. So it comes right down to sticking to the fundamentals. I personally like the Midwest because you're not dealing with weather events. I like red states because you have more levers to pull if you have people that aren't paying or breaking the rules in your properties.
Well,
so
Travis, speaking of red states, there's something we're not factoring here at all. Like, there was a huge net migration to areas like Texas and Florida and even Arizona. So we're going back, if you look at this from pandemic, right? I hate even calling it a pandemic if I'm being honest, right? So COVID hits and you had these super liberal states just highly restricted. We live in Oregon and Washington, and we just saw everything shut down in these highly restricted states. People wanted to get out of there. And so, 2020, 21, 22, people were migrating to places like Texas, places like Florida. There was a huge a huge net migration to these states because people wanted to live free. They wanted to live their life how they wanted to live their life and not have all these restrictions. Well, now you fast forward, it's 2026. People are moving away from that. So, of course,
Are they actually though? I wonder about that. Are people actually moving out of those states, or were developers just getting frothy about the migration patterns, thought that was going to continue to happen, overbuilt, and those people never left?
it's both because building lags quite a bit. So you have this huge net migration to places like Florida, places like Texas. You did have people move into these areas, but then when things settled down and the state stopped getting crazy, people are moving out. Like our good friend John Brooks is very active in the Florida market. And I mean, they've had a huge drop in prices and people are leaving the state to go back to where they're from or go back other places now that things have normalized and you're not.
Why are they leaving?
Because it's not what you expect, man. You if you grew up in the Northwest and you're sick of the politics here during COVID and you move to Florida, you'll be in Florida for like a year or two and be like, okay, it's a different climate, it's a different culture, it's different people, it's different food, it's different everything, different schools, everything's different.
Not as scenic.
So so yeah, it might sound like this great idea during this time in history where maybe you're turned off by the politics or the way that people are handling COVID. But for me, it's like if you see actions due to some rare out of the blue inputs, black swan. So like COVID was this black swan event, whatever you want to call it. It was this input that's not hitting us we're not seeing the same input every year. Then be careful about the decisions you make based on that. Like RV parks, for example, during COVID, because people had to stay away from each other and all the things, people bought a lot of RVs. RVs went nuts. We bought an RV park during COVID. It was doing amazing, but we underwrote it for 2019 numbers because we understood that this too shall pass. There's going to be this bump. People are going to behave differently during this event. And therefore, we're going to look at the numbers in 2019. I think it's the same thing for like migration. Why are people migrating? Okay, are people migrating because of something that's going to last a long time? Or are people migrating because there's a temporary oil boom in North Dakota? Or there's COVID restrictions in Washington?
But that's my whole point. So like then you have a bunch of people moving to Texas, right? So you have a bunch of people moving to Texas. So then you have not only big time developers building, say multifamily properties, then you have everybody jumping in because they're like, this is where it's headed. X amount of people are moving here every single day. I'm going to start investing, and they're not based on fundamentals. And that's going back to what I originally said is every market is local into of itself. And if you're buying on fundamentals, it doesn't matter if it is Oregon or Washington or Florida or Texas, you buy on fundamentals and that's how you own real estate long term. If you're not buying on fundamentals, you're only buying on hope appreciation and that the market's going to go up forever, or you can buy low, sell high. That's when people get their ass kicked. They're buying what they think is low when they're actually buying at market or above market prices, hoping that the value in a year, 2 years, 3 years will be up. And that works in the short term until it doesn't. And you have this oversupply and you have now people moving out and you're fucked because the property didn't work on cash flow fundamentals.
Well, I think you just hit it. Two things. One, speculation can come in a lot of forms. Speculation for rent increases, speculation that interest rates are going to come down, speculation that cap rates are going to compress if you're talking commercial real estate. So don't be speculative. Don't follow the herd, right? I mean, the old adage of, be greedy when others are fearful, be fearful when others are greedy. I mean, that stands true here too. Like, and ask yourself, why are all these people moving in? Is this just a trend? And am I following the herd? And lastly, and you hit this all the time, Gabe, absolutely do not buy properties on future rents. Make sure the property works as is.